All right, welcome everyone to the deep dive. Today we're going to be really taking a look at something pretty foundational, I think, for the next decade. We're going to be talking about the Congressional Budget Office's report, the latest one called the Budget and Economic Outlook, 2025 to 2035.
Yeah, this is the report you don't really want to take to the beach to read.
Right, right.
But it really does give us the definitive, nonpartisan analysis of what the federal government's finances are going to look like going forward, so spending, revenue, and debt, along with the broader economy. And all of this, assuming that the laws that we have in place now basically stay the same. So think of it this way. It's kind of like the financial forecast for the next 10 years, based on all the expert analysis of the CBO, and as of January 2025, they've incorporated all the economic data through the end of last year, 2024, and any legislation that was enacted up through January 6th of this year.
Yeah, and we know your time is precious, so we're going to try and break down what we think are the most important parts of this report, and it's a big document. We're going to be going through budget deficits, and we're going to think about the scale of those budget deficits.
Yeah.
We're going to think about the national debt and what that means historically and where the government's money is going and where it's coming from. We'll also think about the CBO's projections for things like economic growth, inflation, interest rates, and kind of bring it all together and think about, what are the potential implications of this for the next decade?
Right, right.
Okay, so let's kind of unpack this. Let's start with the big picture.
Okay.
Deficits, budget deficits.
Budget deficits. So right now, in fiscal year 2025, the CBO is projecting a federal budget deficit of $1.9 trillion.
Wow.
That's a huge number. For perspective, that's larger than the entire annual economic output of many developed nations.
Right.
So that gives you a sense of the scale of the shortfall. Now, looking forward, if we adjust for some of the weird timing shifts in payments between fiscal years, sometimes that makes the annual deficit figure look a little bit funky. But if we adjust for that, they think it's going to grow to $2.7 trillion by 2035.
Wow. So this is where it gets really interesting, because if we think about the deficit relative to the size of the economy, right, the gross domestic product, or GDP, it's expected to be 6.2% in 2025. It actually goes down a little bit to 5.2% by 2027.
Right.
But then it starts to go back up and it reaches 6.1% in 2035. And if we think about it historically, that 2035 number is way higher than the average deficit that we've seen over the past 50 years. So it's been about 3.8% of GDP. So this means that potentially the government might have less ability to respond to, say, unexpected events, crises, or to invest in long-term growth, because so much of their revenue is going to be going to this deficit.
Yeah, one of the things that they point to here as really being the driver of this increase in the deficit is mandatory spending.
Right.
And this is things like Social Security and Medicare. And that's coupled with the rising net interest costs. So those two things together are really going to be growing faster than the government's revenues.
Yeah. And, one thing that is sort of a brighter spot in the short term is that the projected deficit for 2025 is actually $0.1 trillion less than the CBO was thinking it was going to be back in June of 2024. And when we think about the cumulative deficit over the entire decade, 2025 to 2034, it's actually now projected to be $1 trillion less than they were thinking before. So, in the short term, what's going on that's causing this little bit less of a bad outlook?
Well, they're mostly pointing to increased projections for individual income tax collections.
Oh.
So basically, they're expecting people to make more money. And if people make more money, they collect more in taxes.
Okay, so the short-term picture is a little bit less bad.
Right.
But the long-term trajectory is still concerning. Let's switch gears a little bit now and think about a consequence of these really large deficits, which is the national debt. So what is the national debt looking like?
Yeah, well, total federal debt held by the public. So this is an intergovernmental debt. This is debt held by the public is already at 100% of GDP in 2025. And the CBO projects that it's going to rise to 118% of GDP by 2035.
So what does that mean historically?
So 118% of GDP would actually be higher than any point in U.S. history. So even higher than after World War II, when it peaked at 106% of GDP in 1946.
That's incredible. So we're talking about a level of debt that we have never seen in this country before, potentially.
Right.
Okay, so let's shift gears again and think about where this money is actually going. So what are the outlays the government's spending?
Yeah, so in 2025, total federal outlays are projected to be about $7 trillion. It's 23.3% of GDP. And then looking forward to 2035, that's expected to go up to 24.4% of GDP. So again, that's adjusted for the timing shifts.
So what's driving this increase?
Well, it's really a combination of things, but mainly the growth in Social Security, Medicare, and then the rising net interest cost.
Yeah, and so there's this really interesting shift that's happening in the allocation of funds.
Oh, yeah.
Right?
Yeah.
So the CBO is saying that the cost of servicing the national debt, so the net interest payments, will actually be bigger than total defense spending every year from 2025 to 2035.
Right.
And even more crazy is that by 2027, they're saying that interest costs are going to be bigger than all non-defense discretionary spending
Wow.
combined. And by 2027, the share of GDP that's going to interest payments is going to be bigger than it's ever been since at least 1940. So this is really a huge change in how we are allocating taxpayer money, where we're taking more and more of that money and putting it towards debt.
Just paying off the interest on what we already owe.
Right.
Exactly.
So in 2035, if we think about the share of GDP that's going to each of these categories, what's that breakdown looking like?
So mandatory spending is going to be the biggest chunk of that, and it's going to be 15.1% of GDP. And then discretionary spending, which is the stuff that Congress appropriates every year, is going to be 5.3%. And then that net interest is going to be 4.1%.
Yeah, wow. So we've seen where the money's going out. Let's think about where the money's coming from, where the revenues are coming from. So what does the CBO say about that?
So in 2025, they project that total federal revenues are going to be $5.2 trillion. That's 17.1% of GDP. And then over the next few years, going up to 2027, they actually expect that to increase to 18.2% of GDP.
Okay, so why is that happening?
Well, a lot of that is because of the scheduled expiration of several provisions of the 2017 Tax Act. So when those expire, tax rates are going to revert to what they were before, and that's going to lead to an increase in revenue.
Okay, but after that initial increase, it looks like revenue is going to kind of go down a little bit and then go back up again.
Yeah, that's right. So they project it to go down to 17.9% of GDP in 2029, and then kind of steadily increase after that to 18.3% by 2035.
And if we break down those revenues by their source, what's that going to look like in 2035?
So the biggest chunk of it is going to come from individual income taxes, and that's projected to be 10% of GDP in 2035. And then payroll taxes are going to be 5.9% of GDP, and that mostly goes to stuff like Social Security and Medicare. Corporate income taxes are expected to be 1.2% of GDP, and then all the other stuff is going to be 1.1%. One of the interesting things is that they actually expect corporate income tax receipts to decline as a share of GDP after 2025.
Interesting. Okay, so we've looked at the budget forecast. Now let's think about the overall economy. What is the CBO saying about economic growth?
So they are expecting things to slow down a little bit.
Okay.
They estimate that the growth rate for 2024 is going to be 2.3%.
Okay.
But they think that's going to slow to 1.9% in 2025.
Okay.
And then 1.8% in 2026. So we're going to have this moderation of growth.
And what are some of the things that they're saying are going to contribute to this?
Well, the unemployment rate is expected to go up, and inflation is actually expected to decrease. But they also say that the Federal Reserve, the Fed, is probably going to continue to lower interest rates through the end of 2026, and that should kind of help keep the economy going a little bit.
Okay, so what about inflation? Because I know a lot of people have been worried about inflation. What are they saying about that?
Yeah, they were expecting that to ease up.
Okay.
So they're looking at the Personal Consumption Expenditures Price Index, the PCE price index. That's what the Fed likes to use.
Yeah.
And they're expecting that to go from 2.5% in 2024 to about 2% by 2027, and then stay around there after that. So, good news for folks who are worried about inflation. It's supposed to kind of go back down to what the Fed wants it to be.
Right, right. What about the labor market?
Yeah, so they're projecting that the unemployment rate's going to go up a little bit. So by the end of 2025, they think it's going to be 4.3%, and then by the end of 2026, it's going to go up to 4.4%. But then after that, it's supposed to kind of steadily decline. So, up a little bit and then down after that.
Okay, so you mentioned interest rates and the Fed earlier. What are their expectations for what the Fed is going to do with interest rates?
Well, as we said, they think that they're going to continue to lower interest rates through the end of 2026. They also think that longer-term interest rates are going to go down, too. So things like the yield on a 10-year Treasury note.
Right.
And then after 2026, those are expected to kind of stay the same.
And that's consistent with their inflation outlook.
Right, right.
One thing that I noticed in the report, they were talking about residential investment, so housing. What's the outlook for housing?
Interestingly, they project that real residential investment is actually going to increase in 2025 and 2026.
Yeah.
And that's mostly because they think that, falling interest rates and, pent-up demand for housing, recent population growth, And the fact that we don't have that many homes on the market right now is going to lead people to want to build more houses and renovate their existing houses.
Right. Okay. So we've talked about all of these projections, but the CBO also made some pretty big revisions to their projections from back in June
Yeah.
of 2024. So what are some of the things that have really changed?
Well, the biggest change that they made is that the projected 10-year deficit is actually a lot smaller than they thought it was going to be. So we're talking 2025 to 2034. It's actually $1 trillion less than what they had projected back in June.
And what's driving this change?
Mostly it's economic factors. So they've changed their estimates for individual income tax revenue. They
Yeah.
think they're going to get more of that, which,
Right.
shows you just how sensitive these projections are to the economy.
Right.
But there were some other things that happened that kind of went the other way and offset that.
Yeah. Like what?
Well, there were legislative changes that they made since June of 2024. So things like adjustments to Social Security benefits under the Social Security Fairness Act. And then they also had a temporary reduction in mandatory funding for the IRS. And those two things actually increased the projected deficit a little bit.
Uh-huh.
And then there were some technical adjustments that they made too. So they revised their estimates for Medicaid spending. They think that's going to be higher. And then they also revised their estimates for corporate income tax revenue. And they think they're going to get a little less of that.
Mm.
So those things kind of countered the deficit reduction that we got from the economic stuff.
So even though there were these things that pushed the deficit up a little bit, the overall outlook for the national debt has actually gotten better since June.
That's right. So they're now projecting that the level of debt at the end of 2034 is going to be lower than they thought it was going to be. And because they think the economy is going to be a little bit bigger than they thought, the debt to GDP ratio for 2034 is now down to 117%
Okay.
from 122%.
That's good.
So that's a little bit better.
Okay, so let's try and wrap all this up. We just went through a lot of stuff about the CBO report. So for our listener, what are the really key things to remember?
I mean, the main takeaway, I think, is that we're going to be dealing with some pretty big budget deficits over the next 10 years.
Mm-hmm.
And because of that, the national debt is probably going to reach levels that we've never seen before.
Mm.
And, the economy is expected to slow down a little bit and inflation is supposed to go down. But those things are going to be happening while we're spending more and more on mandatory programs like Social Security and Medicare,
Mm-hmm.
and also spending more and more to service the national debt.
Mm-hmm.
So, there's a lot of moving pieces here, but those are some of the big ones.
And I think that brings us to a really big question, which is, given all of these things that are happening, we have these big budget deficits, we have this national debt, we have economic growth that's slowing down a little bit. What does this mean for government programs, for the stability of our economy in the long term, and for the kinds of policy decisions that we're going to have to make?
Yeah, this really raises some important questions for all of us to be thinking about.
Mm-hmm.
How are these fiscal problems going to play into the conversations that we're having about government spending, about taxes, and about these big entitlement programs like
Right.
Social Security and Medicare? What kind of tough choices might we have to make because of all of this?
If you want to dive even deeper into all this, we really recommend checking out the full report on the CBO's website, cobo.gov. It's got all the details. Think about how these projections might change how you view the policy conversations that are happening and the laws that are potentially going to get passed in the future.
Yeah. I mean, ultimately, this report just shows how complicated our financial future is and how much the economy can change. It's something that we all have to be talking about and thinking about.
Well, thank you for joining us on this deep dive. We'll see you next time.
See you later.